Hello, everyone. Good afternoon. Thank you very much for coming to our technical showcase of Project Mandala and the concept of programmable compliance. Now, you're all going to wonder, what is programmable compliance? And in essence, all it is the attempt or the approach to embed regulatory requirements into smart contracts. So this is exactly what we've done in Project Mandala. We took regulatory compliance checks and embedded them into smart contract-based policy wrappers. And those policy wrappers can be wrapped around any digital asset like a CBDC or a tokenized deposit and can travel all along the payments chain. And so I have the Project Mandala team members here assembled to tell you a bit more about how that exactly works. And I think it's fair to say that MAS has pioneered the concept of programmable compliance and policy wrappers within Project ORCID. So I will call upon Vince to tell us a bit more about Project ORCID and the concept of purpose-built money that MAS has worked on in the last couple of years.
Thank you, Sonia. Yeah, hi, I'm Vincent here. I think for Project ORCID, we started off back then 2 years ago. So we kind of pioneered it in a sense where we kind of started to think how money works in terms when you kind of put it into the digital concept, right? But we also have the idea that we shouldn't just program the money itself, because if you program the money, then this is going to bring a lot of underlying issues, people doubting whether my money is programmable in that sense. So we kind of came up with these 3 different models, where one is called the programmable payment. This is quite similar to what we have right now in terms of things like standing instructions, right? Or you asking a bank to help you to make create a program to say that I want to make a payment tomorrow, and then they will execute it tomorrow. So those are that's the first model that we kind of looked at. The second model, programmable money. So this is the part where actually you're issuing money and you put in programs directly onto the money. But this also creates a problem whereby if you're going to have different programs on different monies, then you're going to have a lot of different set of money, that, although it represents the same thing, but they're all in the different modes of program that are being on it. So that's also one of the issues there. So we move on to the last model, which we really term it as the purpose-bound money. So instead of directly programming the money, we kind of wrap the money against a program, and that program itself allows the money to flow with it. So even when you make a payment between Bank A to Bank B, that program actually flows directly to Bank B and it gets executed through there. So that's how we came up with the idea of what we term as purpose-bound money, right? So to kind of move on to an example and see how it works. So I guess on the screen itself, you can see that in terms of purpose-bound money, we kind of think that there are the possible money that could be underlying to kind of as a collateral under it. One, it could be CBDCs, it could be tokenized bank liabilities, it could be stablecoin. So these are the money that could be wrapped under a purpose-bound money and gets transferred to a sender, or the sender actually creates this purpose-bound money and it sends through to the receiver. And given an example, a simple example, for example, like a voucher. So by saying that this voucher could only be spent at a certain merchant at a certain time period, so these are the conditions that could be programmed in. And when the transaction is made, it's like a smart contract, they will check against the conditions that happen. So is this merchant the whitelisted merchant in this program? Is it between the time period that exists? So once it meets this criteria, the wrapper would unwrap the underlying collateral and the money actually gets sent to the receiver. So that is the kind of idea that we had in terms of kind of putting such a programmability in there. So if you think about it, the use case could be larger, more than just a voucher. It could be things like putting in compliance checks to ensure that the compliance are done in a certain manner before the money actually gets transferred to the ultimate beneficiary. So I think this is one of the idea that gets triggered when we wanted to put the PBM into action, and that gets actually picked up under Project Mandala to kind of utilize this concept and be able to ensure that the end-to-end transaction is actually compliant through this flow. Yeah.
Thanks, Vince. I think it was really exciting for us to pick up the PBM concept developed by MAS and see how we can evolve it in something that might work for cross-border payments and how we can embed that conditionality into cross-border payments arrangements. Now, Friedrich, a lot of the BIS Innovation Hub projects are dealing with cross-border payments, be it for digital assets or more traditional payment systems, but somehow the compliance aspect has always been scoped out because of the complexity around regulatory frameworks that are disparate across countries. But Project Mandala decided to pick it right up and kind of focus just on that specific area, and inspired by the concept of PBM, developed something very novel. Can you tell us more about what that looks like in the context of Mandala? How has this policy wrapper evolved in the cross-border payments compliance aspect?
Yeah, definitely. So a few things here to unfold. First, as you mentioned, right, compliance was usually out of scope, and it was really this idea to finally build this component that tackles compliance, and Mandala does so in a set of novel ways. So first and foremost, it's a peer-to-peer system. That means financial institutions run a node in the system and can communicate peer-to-peer with each other directly. So there's no middleman here. Within this Mandala node, they have different components. One is the rules engine, where rules are stored in a standardized format. So let's go through a transaction. Before the transaction, they would actually do a pre-validation check to conduct the compliance check, basically. So the originating bank and the beneficiary bank, we later refer to them as OB and BB, initiate this compliance check, and the rules engine will determine which rules apply for this particular transaction. Once those rules are selected, they are being passed to the proof engine. I'll speak a bit more about the proof engine in the next part, but basically what happens here is that for each of these rules, a verifiable proof of compliance is being created. This proof can then be attached to an asset and verified, basically cryptographically. That means that it's fully tamper-proof. You can only verify the proof, and you know, okay, this is a compliant transaction. So then, in the next step, it's been passed to the asset settlement system. So in Project Mandala, we actually integrated with two different types. One was a Swift integration to demonstrate the traditional finance system, and the other one that we are focusing on more here is the digital asset system integration. And what we did here is we took the PBM concept that MAS had developed and adapted it to be able to verify these cryptographic proofs of compliance. And to give you a bit more of an understanding of what these proofs basically are is having a look into the proof engine here. We looked at really for the use cases, we had at what are the policies that you need to be compliant with. And one is, for example, a public sanctions list check. So let's say the UN publishes a sanctions list, and you've got to make sure that neither the recipient nor the sender are part of this sanctions list. So this we call a non-interactive check, because the sanctions list is basically public data, and the OB, the originator bank, can create a cryptographic proof of compliance without having to interact with any external party. So they know their client, they know the recipient, and then they create a CK proof. This is basically a long number that can be mathematically verified later on. Some other compliance checks requires a different approach though, because both sides of the transaction have private data. So one example here is private sanctions lists. Commercial banks usually have these internal lists of sanctions lists of individuals they can't interact with, and they don't want to share these lists. So in this case, now both sides have private data, right? The OB, the originator bank, has the client data, the beneficiary bank has the private sanctions list, and now they want to determine, is this a compliant transaction without sharing the data with each other. So within Mandala, we built this multi-party compute approach that can do this check without sharing the data. So you encrypt the data, you put it into the system, and then you get the check out basically. And in this case, they would create a signature that is being added to the proof set. And together then this proof set is being passed into the policy wrapper that we developed there.
Thank you. This was a great overview of how Mandala actually works and what the core components are. And I encourage everyone to check out our report that was published just last week. We also have technical explainer videos that will help walk you through all the use cases and the various components that Friedrich explained. But I wanted to hone in on the policy wrapper that we built for Mandala. Now, is accurate to say that Banque de France was provided instrumental contributions to the project and helped us with the evolution of the PBM-based policy wrapper developed by MAS and adapted for the Mandala cross-border compliance context. We built it for one specific use case only, but we have to be mindful that it's a general purpose-based policy wrapper. That just means that it can be adapted to any payment corridor, any currency, and any regulatory requirements. So we build it in such a way that is fully fungible. And Khai, who's here from the Banque de France, will have a mini demo to show us how this policy wrapper actually works. How can we think about this policy wrappers in the context of a wholesale CBDC, which was one of our use cases in Project Mandala. Khai?
Yeah, thank you. Thank you, Sonia. Yeah. Can you hear me? Yeah. Thank you, Sonia. So I would like to provide a demo for the execution of this concept. So we have here two concepts. The first one is the PBM, how in fact we wrap a digital currency in order to transfer in fact this digital currency with additional feature. And the second concept is the proof that have been generated when we verify all the compliance topics. So here, what I would like to show you is what is the proof. So the proof look like that, is a chain of character around 1,500 character. And this proof, after the verification by the compliance officer or by, in fact, the sender bank, it will be transferred on-chain in the blockchain for settlement with the CBDC. So in this situation, I show you the balances. So you can see that OB hold the 100 million of SGD, and OB would like to send, in fact, this amount to the beneficiary bank. So I'm connecting with OB profile, and what I have to do first is to wrap this CBDC in the blockchain. I have to sign the transaction. So what I show you here is in fact what happened behind, and of course it could be fully in STP. We would like to show you each step how it works. So we're waiting that the transaction process in the blockchain, and you can see that the funds have been transferred to the wrap. And you can see in the real time, so we are connecting directly to the blockchain explorer, and we can see the result in the blockchain, in the ledger. So after wrapping, now we will be able to send the wrap. And by sending the wrap, as in, just to sign the transaction, so in the wrap, now, by sending that, it will be verified with the proof if, in fact, the proof is correct or not. So, as you have seen, this proof is a concatenation of the three different checks, the cash management check, the private list and the public list sanction. So now, in fact, the result is correct, and we can see, in fact, in the blockchain that the wrap have been sent from OB to BB. So now, normally, in the balances, we can see that the beneficiary bank hold this amount of wrap. So what he has to do is to unwrap in order to hold the underlying CBDC. So for that, I will connect to the BB profile. And I will unwrap. So now what will happen is the policy wrapper, it is a smart contract that will remove the wrap and release, in fact, the underlying SGD in his wallet. So just to refresh the operation. Okay, so you can see in the real time that have been changed. So if I check in the blockchain, so just waiting the answer on the ledger, I can see that the wrap have been removed and there are some transfer of the SGD, so from the smart contract, the policy wrapper, to the BB here. Just a remark on that is you can see the fees of the transaction. So we are on the unit of the Gwei. Gwei is, for example, 10 Gwei is equivalent of 1 cent of dollar. Okay. So now you can see the result. Beneficiary bank hold in the end the SGD. Okay, so this is the full picture of the flows of the payment, and we have some times for the question answer.
Thank you very much,
Yeah.
Khai. I mean, I guess you consider yourselves lucky because you got to see the demo. It's like basically a sneak preview, but if you want to find out more, we have our booth here in Hall 5, the BIS Innovation Hub booth, and our technology implementation partner is sitting right here in the first row. And of course, you're welcome to approach any of us for further questions. But I want to pick up one question that was raised by the audience. What were some of the challenges that we have encountered during the proof of concept? Maybe I will direct that question to you, Friedrich. What were some of the challenges that you had during the proof of concepts that we built? Quite an ambitious project, I would say. But yeah, there's always challenges, right? Never just easy.
Yeah, definitely. I mean, loads of challenges. I think it's the size of the project itself speaks for how much we actually implemented, and then so scope itself was one of the biggest challenges. Which policies do we include? How do we translate these policies into a machine readable format? How far do we go towards standardizing the policies themselves, right? Because ultimately the goal is to make this as fungible as possible. So in the future we could implement further policies, we could extend this to other currencies. So I think that was one of the challenges. Of course, on the technical side, lots of challenges coming up with the whole architecture in the first place, right? Finding out, okay, CK proofs work very well on these kind of public sanctions lists, but they don't work so well on anything that's interactive, where you need data inputs from both sides. So then eventually going to the MPC approach, figuring out how that works, that was, I think, quite a challenge. On the other hand, also how computationally intensive this proof generation still is. So our tech implementation partner did then some optimizations. I think that was actually quite interesting, but it's still, like the CK proof generation is still quite computationally intensive. Same for the MPC operations. On the other hand, we also discovered that the verification is not intensive at all, right? So you can do that in a smart contract on the blockchain, so that's quite promising. Yeah.
Great, thank you. I see more questions coming in. I hope we can get to all of them. The next question was around how is this proof of concept different from sending cryptocurrency with additional metadata? So I guess for crypto assets, the rule is any additional information can be sent in form of metadata. So how is that different from what we built as part of Project Mandala? Vince, do you have any ideas on how we are different from the crypto asset systems?
I think the way that we are doing is, I would say it's quite similar in the sense of that you could embed additional metadata in there. But I suppose where we wanted to differentiate again, where I mentioned against is with money versus the actual wrap data, because we do not really want to excuse me, kind of program the money in there. Even though the transfer, we could embed additional metadata in there, but it also creates a tightly coupled way of transferring that money across. And that may create certain problems in terms of updating, if there are changes in terms of the policies when they're being sent across, then that also requires a change on that smart contract where the token is. So I guess we're trying to decouple this, this set of programmability against the money underlying it, and such that then you have a more flexible way of kind of configure the different information, the different programmings, and just put underlying the collateral underneath it and to transfer the money across. I think that's where the key difference where I see in this is.
Yeah, that's true. Maybe I would just add that actually these compliance checks are verifiable, right? So if you wanted to verify whether these checks have actually been accurately and properly completed, you can go back and verify it by yourself, right? So that's different from just regular metadata, right?
Yeah. Maybe just to add on in there, but sorry, Patrick. I think it's also to say that I think we had a discussion as well that different jurisdictions have different sets of requirements. Yeah, so it's also pretty difficult to put in a set of standards that could satisfy everyone. So having maybe a different sets that covers the different jurisdiction might work in that sense. Yeah.
Yeah, and great points. Just to add is as we said, the programmability component, right? What this really means is you can attach a rule to the asset directly. So instead of just attaching metadata, you can now verify that metadata on chain. And the transaction would actually, that's the part that Khai did not show because of the time, I think, but the transaction would not go through if this wouldn't be a valid proof. So if one of the individuals would be, let's say, sanctions, or if the CFM policies wouldn't have been verified, then the transaction would not go through. And that's all being conditionally verified in the smart contracts.
Yeah, those are good points. I mean, we focus mainly on entities, right, company level, but this can also be adapted to individuals. A lot more work would be needed there, but it's fully fungible. I will take one last question because we're running out of time, but as I mentioned, you can find us at the booth, or MAS is also available to answer questions, same like BDF, the stand is right there, so you're welcome to talk to us anytime. Maybe this one last question for Khai around smart contracts, given that BDF has been very active in the whole domain of like developing and building smart contracts. So what does it take to encourage widespread adoption of smart contracts in the markets in general?
Yes, in order to encourage the adoption of smart contract, is first to find relevant use cases to use that. And the role of the smart contract is to address some services globally on-chain that exist off-chain by intermediaries. So the objective is to prove that the smart contract can resolve, in fact, some issue or can provide these services in the decentralization manner. And as use cases, of course, we have all working on the payment, international payment use cases, but also on the financial market. And we can see that in the value chain, that there are some services that could be aggregated in the smart contract, for example, to manage the liquidity, to manage the control, the programmability of the payment, for example. So the answer is first, the use cases. Second is in how to address the risk, to transfer, in fact, these services in the smart contract. And we have some research regarding how to manage the risk, how to control the stability of the financial market, and if we resolve, in fact, and of course the scalability, and if we resolve, in fact, all of these topics, then, in fact, we can say that we can adopt, in fact, the development of the smart contract. Yeah.
Thank you, Khai. And this brings me actually to the end of our sessions. There are a number of other questions that we didn't get to, unfortunately, but again, like, you can always approach us anytime to discuss a little bit more. I think it's fair to say that with this concept of a smart contract-based policy wrapper, we're trying to really push the envelope in terms of what programmable compliance means and what it can achieve. Not just for this one use case that we looked at, and it was like a Singapore, Malaysia based use case between two entities in the two jurisdictions using a wholesale CBDC. But the policy wrapper works really for any digital asset. It could be a stablecoin. I saw one of the questions were on, does it work for stablecoins? It could be a tokenized deposit, really any digital asset. And we strive, I think, fair to say, for all of our projects in the BIS Innovation Hub to build something that's modular, that's fungible, that can work not just for one use case or one asset, but really for the entire universe of assets that exist. And it's fair to say that with Mandala, we managed to achieve that with this policy wrapper that hopefully in the future, with the help of all of you here, will help a lot unlock additional use cases, additional payment corridors, maybe a multi-asset settlement use case where we can involve more than just a bilateral settlement use case, but include more assets into that context and really show the true value of what programmable compliance can achieve. So with that, I thank you all for your attention. And again, feel free to come by the booth. MAS is also here, BDF. We're all available for any additional questions. Thank you very much.